Welcome everyone to the DNC Real Estate Show. I'm D.
I'm C.
Hi everyone. Our topic today is going to be real estate terms that you need to know.
Yes, sir. Let's talk about
That's
it.
on the lender side and on the realtor side. So let's start out with you first, okay?
Okay.
All right. So what is the interest rate versus APR? So can you tell them what that is?
Sure. Interest rate is actually your note rate. So that's what's going to actually be on your document called the note.
Okay.
So if you're at 5%, that's going to be your interest rate. The APR is actually the annual percentage rate. And where they're different is to calculate the APR, they take all your fees that are incurred on the loan, they divide that by the term of the loan, and that's how that number comes up to be a little bit higher.
Okay.
Just like when you buy a car, you start at 5%, they give you an APR at like 11%.
Perfect.
In our world, you won't be quite as big of a spread, but that's the difference between the two.
All right. Okay. What is a PMI?
PMI, that's a good one for a lot of folks. That stands for private mortgage insurance. Okay. Private mortgage insurance you're going to pay on a conventional or an FHA loan. So typically what's going to happen is anytime you borrow more than 80% of what the house is worth, I'll use $200,000 as a loan amount example. If you borrow more than $160,000 on a conventional loan, you're going to be required to pay private mortgage insurance. It's going to be rated on what your credit FICO score is.
Okay.
On an FHA loan, you're going to pay private mortgage insurance. It's going to be rated based on what your loan to value is.
Okay.
And on a VA loan, you're not going to pay any private mortgage insurance.
Excellent.
Protects the bank and does not protect you.
Okay. This is a good one, down payment versus closing costs.
Well, that's a real good one because we get asked that question all the time. The down payment is the actually amount of funds that you're going to have contributed that's going to be taken off of the loan amount. You buy a $200,000 property, FHA requires 3.5% down, okay. That's $7,000. Okay. Closing costs are going to be the actual cost that you incur to do the loan. That's where the difference kind of comes in.
Okay, and you bring all that money to the table then, huh?
So now, where you're going to bring that money to the table is you're going to have some earnest money, which David's going to talk about a little bit later. But then after that, you get your down payment, add your closing costs together, subtract your earnest money, and that's going to be your total amount of funds that you're going to contribute into the loan.
Okay, excellent. Okay, excellent. Would you got anything for me?
Yeah, I do have a couple things because people are always confused about what's the difference between a real estate agent and a realtor. Can you tell us about that?
Well, we are real estate agents.
Okay. I mean,
basically, what you have to pass the state board exam, and once you pass the state board exam, typically you have to work for a brokerage for 2 years and get that experience.
Okay.
Okay. A realtor is someone who actually basically work. I mean, we have to be members of NAR. We pay an annual fee to be a member of NAR. Okay. And with that, you have standards. You have code of ethics that you need to follow.
Okay.
So that's why they've been advertising. Make sure they have an R by their name, because a lot of you get some shady agents out there Definitely. So you want them to have some standards and code of ethics. Somebody that when they do something bad, somebody checking them out. Okay.
So what does NAR stand for?
Say it again.
What does NAR stand for?
Realtor.
Okay.
The big R stands for realtor.
Okay.
Make sure to have the R.
Okay. So now, let's talk about something else that people ask about all the time. What is a CMA?
Comparable market analysis. A CMA. Basically, what it is, the comparable. All the houses in the subdivision, typically that's ideal situation. I live in a certain subdivision. What is that house is going for in that subdivision? So my job is to find out what is the house worth. Just like an appraisal. But it all depends on the condition of the house, what you have. Like you were talking about wood floors and stuff like that, compared to a house that just have carpet. So you does it have a basement? So you comparing houses, to each other in a certain mile radius, and you come up with a number, what the house is actually worth.
Okay.
Okay.
So now, one other thing is talk about earnest money. What the heck is that? And what is an offer? What are those two terms?
Okay. When a client first say he would like to submit an offer, I really like the property, I like to submit an offer. Well, you need earnest money. First of all, you need earnest. Typically, you know, the seller has, you need, if it's $300,000 home, they say I might want $3,000 in earnest money.
Okay.
And earnest money is like, it's just like a deposit.
Okay.
You know, it's a deposit that they have that if you meet all the conditions of the loan and everything like that, the earnest money is given back. And usually what typically would happen is deducted from the loan, typically
Yes,
what
sir.
happens, you know, or they get a cash back at the end
Sure,
if they
if there's
meet all
money
the other
left over,
criteria.
for
Yes,
sure.
yes.
Absolutely.
So it's earnest money. It's really just a deposit, and it protects the seller per se, because you know, what if we get to the closing table and I just say, man, I don't want to get this house now. So the seller like, I had this over a whole month and they have nothing.
I don't even want to think
yes.
about it.
so you get what I'm saying on
Yes,
that
sir.
in regards to earnest money. And the offer is, you know, once they will say I want to submit an offer, it's not a verbal offer. You actually have to sign some paperwork in writing. So,
Okay.
you know, because verbal seem to change sometimes. So you actually have to write a contract, write the offer with dates and contracts and terms that everybody needs to fulfill.
Okay.
And then you have your buyer sign it, and then the buyer submit the offer to the seller, and basically either they accept, reject, or counter.
Okay.
Okay?
That makes sense.
Okay.
Anything else you want to share with everybody?
Well, you know, the other one is equity.
Okay.
You know, and equity is, you know, because that's the term, you know, as me, you say, do you have any equity in your home?
That's what I take to keep secrets to buy
Yeah.
groceries with, right?
Well, yeah. I'm gonna make it simple. If you owe $200,000 to the bank, you know,
Okay.
you bought it for $200,000. Now you only have $150,000 left.
Okay.
Whatever's that in between that $200,000 and $150,000 is the equity. So I have
Okay.
$50,000 in equity. So
Nice.
that's basically what equity is in
Okay.
regards to that. Okay.
Okay. That sounds
All right.
good.
Why don't you give me your information?
Hey, Calvin Mallard with Fairway Independent Mortgage. Reach out to me direct, 720-364-9726. You can always do an application online, loansbycalvin.com. Google me on Facebook or the internet at Loans by Calvin. Always. How about you, David? How does everybody get a hold of you?
David Babineau, Caldwell Banker Residential Brokerage. Phone number is 303-903-0395. Social media, The Real Estate Man 24/7. My website, My New Homes in Colorado, mynewhomeincolorado.com. Have a blessed day, everyone.
All right, everybody, stay safe. Thank you.
Take care. Bye-bye.